Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we are talking about PayPal. It's kind of interesting. I woke up this morning and thought, what could be happening today on a Monday morning, as perhaps you did too. I saw that the stock market was up, and then all of a sudden I looked over at all of the e-commerce stocks and they were down. And I started to think, what in the world is going on? Because if you look at some of the stocks that have gone down today, here, I just want to read you just a little bit of this. Today, what we saw the Dow Jones was up about 2.95%. The S&P 500 was up 1.17%, but the NASDAQ was down 1.53%. And when we look at some of those different stocks, some of those e-commerce stocks that are in there, Shopify was down 13.01% today. Mercado Libre was down 10.44. Pinterest was down 10. PayPal, which is what we're talking about today, is down 8.61% to $184.72. Now you have to ask yourself, if we have all the other stocks that are up, why are the e-commerce stocks down? Well, the answer to that is the coronavirus vaccine. The concept is that there are a lot of people out there that think that if there's a vaccine, all of a sudden the economy is going to turn back around and people are going to start rushing back to brick and mortar. Well, I have an opinion on that. And my opinion is that things are going to be changing, but not that fast. When we look at how economies progress, it's going to take a little bit of time for the vaccine to get into the general population. People are still going to be buying Christmas items over the internet. E-commerce is not going away. And I really think that as you look at what we're talking about today with PayPal, you're going to see that perhaps this dip in the price is a buying opportunity rather than something that you should run for the hills for. So let's go ahead and begin in with the daily stock analysis. Okay, we're going to take a look at PayPal in a little bit different way to begin with. I want to remind you that if you're in Texas and you need help with your financial planning, go over to richardsfinancialplanning.com and you can learn more about that. Okay, let's look a little bit at PayPal because PayPal does a little bit more than just process electronic payments. Let's look at this together and see what's going on over there. Now, I took a look at this company about 2 months ago, and it's interesting to see that the value changes so much. 2 months ago, it was $225 billion. Today, it's $223 billion, which is still a whole lot of money. But the whole idea is that this stock hasn't changed dramatically in 2 months. Even though that we've seen it give up some price today, it's still there and it's still going pretty good. Remember the things that we're going to look at: SEC. We're going to look at the stability, the earnings, and the competitiveness of this stock. And we're going to remember something that Warren Buffett said. He said that in business, I look for the economic castles that protect unbreachable moats. So when we look at the moat of PayPal, it does have a narrow moat. In other words, this is the barrier between PayPal and its competitors like Global Payment Systems and Visa and MasterCard. And we'll talk about that just a little bit. But part of the thing that keeps the competition away, and you'll see that it's done very well in this year in just a moment, but you'll see that they are very scalable for the future. What that means is that they can grow without much trouble. If they have 346 million users now, it's not going to take much change in their infrastructure or building to go up another 100 million. So it can increase pretty easily. They have a niche which hasn't been caught up to by many of the other payment processors. It's also very easy to use, which can be a double-edged sword in a way because doesn't take much for a merchant to be able to leave. But the point is that it's really easy to use and it's very scalable and it's very reasonably priced. Now let's take a look at actually what happened with the earnings. When the earnings came out about a week ago, it was kind of lackluster in a way. And the reason why that it was lackluster wasn't because of the performance. It was because of the company's forward guidance. They really didn't give a lot of emphasis. And you have to look at it this way, in my opinion, at least they gave some guidance. If you look at companies like Apple, Apple didn't even give guidance in their quarterly earnings report. But with PayPal, their revenues were up year over year 25%. They are up 36% year over year in payment volume. And that is really, really good. When we look at the number of users, though, the number of users is a little bit less than it was in the second quarter. But you have to understand that second quarter was the height of the pandemic. They added on 21.3 million new users. In this past quarter, they only added in 15.2 million. Venmo actually increased significantly, but you have to understand that Venmo, even though it's popular, it only represents about 4% of the total revenue of PayPal, but it's got a lot of room to grow. When we look at actually what's happening with the earnings, this is the earnings growth over the past years from 2015, and it doesn't take a lot to see that the earnings have been very consistent in their growth. Yes, it did drop off after the beginning of the year, but hey, there was a thing called a pandemic that was going on. And most of the analysts are in agreement, not all of them, as you'll see when we talk about analysts in just a moment, but many of the analysts feel that they are going to continue with their growth. Now, let's look at the competitiveness of this company. I wonder which one of these on the spaghetti graph this is, as you can see the dancing cursor. Well, you don't have to wonder very long because it's PayPal. PayPal over the past year has outshined every other payment system. Everybody else, you can say that they were definitely the leader of the pack. All of them that you can see here on the spaghetti graph, global payment systems, Visa, MasterCard, they put the rest of them in the dust. Now, we know that the past performance can't be a guarantee of the future results. But let's take a look at a little bit of the words that the analysts are saying about PayPal. Now, those analysts that are bullish are saying, really, okay, look, cash is dirty and it's not really going to get cleaned up too soon. When you go into the grocery store, do you pay with cash or do you pay with your phone or something else like that that's electronic? Generally speaking, even if you do go into the grocery store rather than having it delivered, you're using some sort of electronic medium to transfer funds. Cash is dirty, literally. It just is. And I don't think it's going to be going back. We talked about the scalability of PayPal. They can grow very easily without much change to their infrastructure. The other thing is that is a big advantage, even before the coronavirus pandemic hit, PayPal was established as a premier payment processor. So they've got a head start on much of their competition, but everything is not rosy at PayPal. Look at what some of the bearish analysts are saying. They're saying that larger e-commerce companies may become a threat. Let's think of some of the companies like in China, like Baidu and JD.com, and in the States like Amazon. They could start the payment processing the same way that PayPal does it if they decide to turn their attention to it. So that could possibly be something that could turn around pretty quickly depending upon the emphasis that the company, that their competitors would put into it. Here's a big one that I really didn't think about, but some of the analysts have brought up. Alipay and WeChat have actually been favored by the Chinese government. And if a government favors you as doing business in their country, as in China, you've got a long ways to go to compete and to change their mind. Look at what's going on right now with Alibaba and Ant Group. Ant Group's IPO got put on the back burner because of the government didn't want things working the way that it was. So if the government's on your side in China or some of these different countries, then you've got a friend that's going to make your business grow. And Venmo is limited in its emphasis, in its ability to influence the overall revenues. As you saw earlier, Venmo only represents about 4% of the total revenues for PayPal. Now let's take a look and see what Morningstar is saying about PayPal. Remember, Morningstar is a really conservative company when it comes to their analyst projections, and they're only saying that PayPal's worth $110. Now, before you click off the channel and say, I'm selling, I want you to look at what some of the other analysts are saying, because remember that Morningstar is a really conservative research house. It is up, according to them, about 67% in premium, and they only give it 1 star. Remember, the star system is different for mutual funds as opposed to stocks. With stocks, the only representation that the star system has at Morningstar is value. Value is the only thing it represents. Okay, let's take a look at what many other analysts are saying about PayPal. This is a closely followed stock. There's 31 analysts that are following this particular stock, and wow, 24 of them are saying, yes, this is still a strong stock and this is still a buy. I'm really actually surprised that 4 of them put a hold on it. There's none of them that are saying sell right now. So if you see the stock down today over 8%, these are not the big wirehouses that are selling this stock. These are, people that have gotten into the stock and have gone, oh my gosh, the coronavirus vaccine is going to make PayPal obsolete. I don't think so. But let's take a look and see how far this stock's come this year. It's been pretty amazing. A year ago in November, they were only $102.67 a share. They've grown by close to 80% in a year. They were, as they closed today, at 184.72. That's pretty amazing. Of course, we know the past performance can't guarantee what the future results are going to do, but I'm going to take a little bit of a technical analyst view on this right now. I know that a lot of stuff when we talk about the SEC, the stability, the earnings, the competitiveness, that's more of a fundamental analyst viewpoint when we're looking at the numbers. Let's take a look at the sentiment right now of this stock. And by doing that, what we're going to do is we're going to analyze the calls and the puts that are existing. Now, I took the calls and puts that are out there just a little bit because you're going to see some dramatic numbers here in just a second. As you look at this, you can see the spinning green bubble down here. This is the calls that are out for December the 18th. There's 29,000, almost 30,000 contracts on this stock at $210. Now remember, a call is an option to buy. Now that doesn't mean that they're actually going to end up buying it and owning it. They may end up selling that call before it is actually maturing. But right now we've got about 30,000 calls that are outstanding at $210 a share. And that's what I think that a lot of these analysts are looking for. They're looking for this stock to surge. On the next screen, you're going to see what some of those analysts are actually saying. But let's take a look at also the puts. The puts, wow, there's 15,000 of them that are outstanding out there right now. And remember, the puts, where the calls are going to be an option to buy, the puts are going to be an option to sell, and these are contracts. And remember, the closer that we get to this strike price, and it's ironic that the strike price on both the calls and puts at this point is $210. But you've got some protection on here and you've got some optimism too. But I think that the real key is that $210 price right now. I think that's what you should center on. Remember, we're selling at 187. I think that it's got some room to grow. Let's take a look real close at what some of the analysts have said. And this is not all of them. Remember, there's about 31 analysts that are putting out opinions on PayPal. I just took the ones that were the most recent because I think that that's probably more accurate. When we look at them, the yellow line, the yellow circle, as you see, that's from BMO Capital Markets. And they're saying that they have a price on this range that they're looking at 200 to 193. They're at 187 now. Remember that. All right. On the upper side, Rosenblatt Securities is putting a buy on this, and they're expecting it to go up 280 to 250. So look, I can't tell you, is this the best time to buy right now? I don't know. But I can tell you, I think that it's still a stock that's worth looking at. If I were going to be buying this stock, I would be cautious about it because I think that with the craziness that's still around and possible with the political environment in between now and January is there. And also, let's say that something goes awry with the coronavirus vaccine and it's pushed back, it could affect the value of this stock significantly too also. But if we go out, in my opinion, if we go out, let's say a year from now, we've got some growth potential. I think 187 is probably a pretty good price, but dollar cost average, I think that's going to be your best bet. Okay. I thank you a whole lot for listening today. If you have a stock that you are interested in, I picked this one because somebody had written in about it. And if you have a stock or an opinion that you'd like some information on, put it into the platform. I can't guarantee you that I'm going to get to it because I've got so many different requests. I'm blessed with a lot of followers on LinkedIn, on Facebook, on Twitter, and on YouTube. But I will try my best if I can get around to your request. So thank you a whole lot for listening and have a great Monday evening. And I will talk to you tomorrow.